Good morning, guys. Good morning. Good morning. How are you doing today? Good morning. If you can hear me loud and clear, please drop a comment. Confirm you can hear me loud and clear, and also confirm you can see my screen clearly. Good morning. Good morning. How are you doing today? What pair are you considering trading today? Let me know in the comment section. What pair are you considering trading today? What's your bias on that pair? What's your bias on the pair? What pair are you considering trading? If you have any question or there's any pair you want us to look at together, just drop it in the comment section. Thanks for joining. If there's any pair you want us to analyze, kindly drop it in the comment section. So let's start by looking at the calendar. Today is 6th of May. What do we have on the calendar? Okay, so today, 6th of May, we're only expecting a major news from New Zealand. Employment change and unemployment rate will be released today from New Zealand, and that would be by 11:45 p.m. Nigerian time. 11:45 p.m. Nigerian time. And we have here the previous and the forecast value. Then we also have the previous and the forecast value. So for employment change, they're expecting an increase for employment change, and for unemployment rates, they're expecting an increase on both. So if the data comes out positive, you should expect New Zealand to be bullish. If both data comes out positive, we should expect the New Zealand dollar to be bullish. Okay, so if you're considering trading New Zealand pairs today, don't aim for too much. Don't aim for too much. Okay, you could just go for like say 50, 60 pips. Okay, or you wait for this news to be released before you trade New Zealand dollar. Okay, either go for little pips or wait for this major news release before you take a trade. I hope that is clear. If you have any question, drop it in the comment section. Okay, so let's go to the chart. Let me know which pair you want me to analyze in the comment section. Drop it in the comment section. So let's start by looking at the dollar index and the yen basket. Let's start by looking at the dollar index, then we'll look at the yen basket. We want to know the strength of the dollar. As they say, dollar is the king. Dollar is king, so we need to know the direction for the dollar. So like I told you guys in the class we had yesterday, or that was on Sunday, I told you my bias for the dollar this week is still bullish. Okay, but at the moment, since the market opened yesterday, it has been bearish. And I shared with you guys, I think it was still on Sunday, I told you guys, if you go down to 4-hour time frame, I think we have a fair value gap here on the 4-hour time frame that the dollar, I think, needs to fill before going bullish. Okay, so you can see this fair value gap here we have on the 4-hour time frame. I think the dollar, okay, is likely going to come fill this fair value gap before going bullish. Okay, so that's my expectation on the dollar. It is bullish for the week, but for today's market, I am bearish on the dollar. I am bearish on the dollar because yesterday candle closed bearish, and you can see what has played out today. You can see what has played out today. First thing they did was to clear the liquidity residing up at the high of yesterday. That was the first thing they did this morning. They've cleared the liquidity residing at the high of yesterday. And if you go to 4-hour time frame, what can you see on 4-hour? So you can see here we had, and this is the first candle for the day on 4-hour. And you can see this is what? A shooting star. This is a shooting star, and this was used to fill this gap. You can see this gap here. That pullback, we had a fair value gap here. You can see, so that move was to clear or to fill this fair value gap, and also to clear the liquidity residing at this previous high. They know a lot of retail traders that have exited sell after the formation of this doji, and their stop losses would be at this high. So the first thing they did this morning was to sweep the liquidity residing at this previous high and also fill this fair value gap that was created here. Okay, so if you go down to 1 hour time frame, after the formation of this shooting star, you go down to 1 hour, so you can see after the formation of that shooting star on the 4-hour time frame, you come down to 1 hour, you can see that a fair value gap was created. You can see that the fair value gap was created at this point. Okay, so there is a high probability that price would retrace to fill this fair value gap. Okay, so what am I looking out for on DXY? I want to see price pull back to this fair value gap before going bearish on DXY on dollar. Okay, this is my expectation for dollar index. That's my expectation for dollar index. Okay, I want to see price pull back, fill this fair value gap before going bearish. Is that clear? I hope that is clear. I'm bearish on the dollar today's market, bearish on the dollar. Then look for buy from this point. Okay, I'm bearish on the dollar. I want to see it sell, clear all the liquidity residing at these previous lows, fill this fair value gap before going bullish. That's my expectation on the dollar. I hope that is clear. If you have any question, if there's any pair you want me to analyze, please drop it in the comment section. So I'm looking for sales on DXY today, sales, but I want to see price pull back to this area before going bearish on dollar index today. Okay, so let's look at yen basket. Again, basket is still bullish, and that's why you would see JPY pairs has been bearish. Yen basket. So you can see yen basket is still bullish, but I think at the moment, let's see. Yen just filled, you can see it's just filled the fair value gap here. You can see it's just filled the fair value gap. This won't be the right time to buy the yen. Okay, you can see this fair value gap just got filled. You can see this fair value gap has been filled, and it's possible for price to retrace from that fair value gap. And if you go back here, you will see we have a support stone resistance here. I think price has also tested that level. You can see, so this level is a key level. This is a key level, right? This is a key level. This is a mitigation block. This is a mitigation block, and it's in confluence with this fair value gap we identified here. So price, there's a high probability for price to pull back from that zone. Okay, so the previous 4 hour, let's see, there was a rejection. 1 hour, let's see 15 minutes. So you can see the pattern we have on 15 minutes. After price filled the fair value gap, you can see the pattern we have here. This is a bearish reversal pattern. We had a shooting star, and the next candle closed as engulfing. You can see it closed below the low of this candle. That tells us that the trend is likely going to change from bullish to bearish. So if you want to sell JPY, if you want to sell the yen, I would advise you wait for price to close below the low of this candle. If a 1 hour candle closes below the low of this candle, you might want to go bearish on yen. Okay, if 1 hour candle closes below this level, you might want to go bearish on yen. I think this pullback is to fill a fair value gap. Let's go down to 5 minutes after the formation of this engulfing candle. It's likely a fair value gap was created on a lower time frame, and that could be the reason for the retracement. So you can see the fair value gap that was created at this point. That is the reason for this pullback. And I think that fair value gap has been filled. You can see that's the reason for the pullback. You can see that. So patiently wait for price. If 1 hour candle closes below this level, that would be a strong confirmation to sell the yen. Okay, but right now it is still bullish. Wait for price to close below this level before you consider selling yen. That means you'll be looking for buys on yen pairs. You'll be looking for buys on yen pairs. I hope that is clear. I hope you all can hear me. If you can hear me, drop a comment if you can hear me. I want to be sure I'm not just communicating to myself. I'm not talking to myself. Can you hear me? If you can hear me, drop a comment. If you have any question, if there's any pair you want us to look at together, drop it in the comment section. Okay. So that's it for the yen. Okay. Then we looked at the dollar index. Let's look at GBP USD. So if I expect yen dollar to be bearish, then I should be looking for buys on GBP USD. GBP USD has been bullish daily. You can see that GBP JPY, sorry, GBP USD has been bullish since the market opened. You can see it's been bullish. Friday candle, let's see, Friday candle closed as let's see, it closed as a doji. Yesterday candle closed as an inverted hammer. You can see that it closed as an inverted hammer. And today candle has been bullish, though before it bought, it went bearish. Okay, I think the pullback was to fill a fair value gap or to clear liquidity residing at this previous low. I think that's the reason for the pullback. You can see, I think what they did was to clear the liquidity residing at this previous low. And also we had a fair value gap here. Okay, we had a fair value gap here, which got filled at this point, but you can see this fair value gap. So it got filled at this point. This was yesterday. It got filled. And they know a lot of retail traders would have bought from this point after the formation of this inverted hammer. And where would they have their stop losses? Their stop losses would be the low of that candle. So I think what they did this morning, the first thing they did was to clear the liquidity residing at these lows. And you can see after they cleared the liquidity, what pattern do we have here? This is an hammer indicating change in trend from bearish to bullish. And you can see after the formation of that hammer, you can see, so this would have been a good entry. After the formation of this hammer, that would have been a good entry for GBP USD. You can see you should have bought GBP USD from this point, 3273. If you had entered buy from this point, you would have made close to 50 pips on GBP USD. You would have made close to 50 pips on GBP USD. So this is what I would advise. If you have not executed any trade on GBP USD, you can see we had a fair value gap here. A fair value gap was created here. I would advise you wait for price to pull back to fill this fair value gap before you buy GBP USD. That is what I would suggest. Wait for price to pull back. You can see the pattern that has formed here on 1 hour. This is a shooting star indicating changing trend from bullish to bearish. Okay, so you want to wait for price to come fill this fair value gap or test this breaker. Okay, wait for price to come fill this fair value gap or test this breaker before you go bullish on GBP USD. That's my take on GBP USD. Okay, that's my take on GBP USD. Let's go back to 4 hour. So I think GBP USD is likely going to clear. GBP USD is likely going to clear this high, this liquidity. Okay, it's likely going to come for this relative equal high. That's my expectation on GU. Okay, these highs is likely going to come, and above these highs, I think we have a fair value gap here. So this could be the next draw on liquidity on GBP USD. That's what I see playing out on GBP USD today. Okay, this is what I see playing out on GBP USD. So if price pulls back to this level, 1.3285 to 1.3358, that's about 70 pips. That's about 70 pips TP. So that's what I see playing out on GBP USD today. Okay. So my take on GBP USD is bullish. Is bullish. Let me know if there's any pair you want me to analyze. Let me know. So that's my take on GBP USD. Look for buys. We'll find similar pattern on Euro USD. Both pairs are positively correlated. Okay, so on GBP USD, so let's start with the daily time frame. Okay, so you can see daily we had a support here. On a daily time frame, we had a support here. Price pulled back, tested that support level, and there was a strong rejection from that support level. And on Friday, candle closed as an inverted hammer. As you can see, it closed as an inverted hammer. See what we had on 4 hour after the formation of that. So on 4 hour, I think we had a fair value gap here. If you go down to, let's see, 1 hour to be able to identify the fair value gap. Let's see on 1 hour. So I think what they did today, I think it was today, yeah. This move was today. What they did was to clear the liquidity residing at this previous low. And I think if you go down to 15 minutes, there's a fair value gap here that I think needs to be filled. Let's see. So you can see on 15 minutes, we had a fair value gap at this point. You can see this fair value gap. That is the reason for that sell. This fair value gap. Okay, that's the reason for the sell. You can see it. They had to push price down to the liquidity reset at this low and also fill the fair value gap. This would have been a good opportunity to buy Euro USD. If you have missed this first flight, if you have missed this first move, you can see a fair value gap has been created here. You can see this fair value gap. Best to wait for this fair value gap to get filled before you buy Euro USD today. This would be a good zone to consider entering a buy on Euro USD today. Patiently wait for price to pull back to this zone before you buy Euro USD. Okay, what's my expectation on Euro USD? Okay, you can see the pattern is similar to what we saw on GBP USD. So we have this high here, that's an area of liquidity. Then we have this also, an area of liquidity. All these levels are areas of liquidity that Euro USD might want to clear. And you can see above these areas of liquidity, we have a fair value gap here. That could be the next draw on liquidity on Euro USD. That could be the next draw on liquidity on Euro USD. Now, before you take a trade here, ensure that the dollar index is bearish. Okay, look for a bearish reversal pattern on dollar index before you take a buy on GU or EU. You cannot buy when you cannot buy Euro USD if dollar index is bullish. You can't buy. You need to ensure that the pattern you're seeing on the dollar index is the inverse of what you're seeing on GU, EU, AU, and NU. I hope that is clear. I hope that is clear. So that's it for Euro USD. Let's look at Simon. Okay, let's look at AU. AU is positively correlated with GU. So let's say AU, AUD, USD. Okay, so this is AUD, USD. So let's start with the daily time frame. Okay, yesterday candle closed as a spinning top. Closed as a spinning top. This was just to test, I think. Price pulled back. There was a breakout from a resistance here. Price breakout from that resistance. You know, probably price is coming to test this broken resistance turn supports. Okay, so let's see for hour. After the close of yesterday candle, what pattern do we have on 4 hour? Let's see. 4 hour. So this was what we had yesterday. Okay, so here we had a fair value gap here. We had a fair value gap here on a 4 hour time frame. Price broke out from that fair value gap. I think they are coming for this low. The liquidity reset at this previous low. This is an hammer, and a lot of retail traders would have executed buy. So I think they want to come for the liquidity residing at this low. And also at this point, there was an area of liquidity at this point. You can see this relative equal low. You can see this relative equal low. So let's go down to 1 hour time frame. After the formation of this relative equal low, let's see what we had on 1 hour time frame. Okay, so you can see what we had here on 1 hour. This retracement was used to fill this fair value gap. And so we had the fair value gap here. And at the early hours of today, I think, yeah, at the early hours of today, what date is this? This is 5th. Okay, this was yesterday. At the late hours of yesterday, price pulled back to fill that fair value gap. And a lot of retail traders would have executed buy after the formation of this pattern. Many would have executed buy. And where would they have their stop loss? Their stop loss is residing at this previous low. So I think what they're trying to do now is to clear the liquidity residing at this previous low. After liquidity has been cleared, look for a bullish reversal pattern. Okay, look out for a bullish reversal pattern on Australian dollar USD. After the liquidity has been cleared, look for buy. Okay, look for a bullish reversal pattern to form before you go bullish. And if you are buying, I think there's a high probability for price to come and clear this relative equal high. Okay, that should be your TP. So patiently wait for a bullish reversal pattern to form on AU. I hope that is clear. You can see it's bearish here now. If you go to DXY, you will see that DXY is bullish at the moment. You can see DXY is bullish at the moment. It's likely coming to fill this fair value gap. Okay, so look for self setup here. Once you're able to identify a self setup here, you go to your Australian dollar, USD, GBP, USD, Euro, USD. Ensure that what you're seeing there is a buy setup. I hope that is clear. So my buyers on AUD USD is bullish for today's market. I hope that is clear. Then gold. Gold is still bullish. Gold is still bullish at the moment. Personally, I wouldn't be buying gold from the current market price. Gold has already gone far. Okay, you can see, let's start with the daily. I think it started this bullish move last Friday. You can see this bullish move started last Friday. It started last Friday, so this won't be the right time to buy gold. I'd rather look for sell pattern. I'd rather look for sales than to buy gold from the current market price. Okay, so I don't think this is the right time to buy gold. If you have not entered a trade, if you are not buying gold at the moment, then you shouldn't take a buy trade on gold. It's very risky. Okay, price could pull back anytime soon. Price could pull back anytime soon. You can see the pattern we had on 4-hour time frame. You can see price is at what? You can see tested this resistance. Can you see that? So you could sell and come back to fill these fair value gaps. So it will be risky for you to take a buy trade on gold. Let's see 1 hour. So you can see price came, tested this resistance, and there's a rejection from that area. So if gold breaks out from this support, if 1 hour candle breaks out from this support, that should be a sell for that will be a sell for gold. If 1 hour candle closes below the support it's created here, then you should expect sell on gold. Please give the video a thumbs up if you haven't done that. Give it a thumbs up, and if this is your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Thanks for joining. If you want to keep getting the value, if you want to keep getting value, you don't want to miss any of the classes, ensure that you subscribe to the channel. Subscribe to the channel. Is there any other instrument you want us to look at? Let me know in the comment section. Is there any other pair you want us to look at? Let me know. Let me know in the comment section. If you have any question, also let me know in the comment section. Okay. Let's look at Euro Aussie, Euro Aussie, and GJ before we end today's session. Let's see Euro Aussie. Okay, Euro Aussie. Let's start with the daily. Okay, so far today, Euro Aussie has been, it's been bullish, and I can see here we had. Let's look at the weekly. Okay, so weekly indicates Euro Aussie is bearish. Okay, so there's a fair value gap here that I think Euro Aussie might want to fill, this fair value gap. Okay, I think this is where Euro Aussie is heading to. I think this is where Euro Aussie is heading to. Okay, it's coming to fill this fair value gap. So let's see daily. Yesterday candle closed, looks an inverted hammer, and you can see there's a tiny fair value gap here. Let's go to 4 hour so we can see it clearly. Let's go down to 4 hour. I think it's created a fair value gap, and it's trying to fill the fair value gap it's created. I think there's a tiny fair value gap here. There's a tiny fair value gap here. Let's go down to 1 hour. So it's created a fair value gap here. Okay, it's created a fair value gap here. Okay, that gap has been filled. Sorry, this is the gap I want to. So you can see yesterday the gap got filled. I think, yeah, it should be yesterday. This gap got filled, and it created. You can see the candlestick pattern that formed there. This is a shooting star. This is a shooting star. So it's likely they would come for the liquidity residing at this previous high. So if you are considering selling Euro Aussie, which is my bias today, wait for price to clear the liquidity residing at this previous high, or wait for 1 hour candle to close below the low of this spinning top before you sell. You either wait for the liquidity residing at this previous high to be cleared, or you wait for 1 hour candle to close below the low of this candle. That's my take on Euro Australian dollar. That's my take on Euro Australian dollar. I hope that is clear. I hope that is clear. Okay, Mr. Ebuka, okay, GBP JPY. Okay, let's look at GBP JPY. GBP JPY. GBP JPY. Okay, so like I said, we might see retracement on GBP JPY. Okay, because the yen, on the yen, we can see yen is about to be bearish. You can see on the yen. So you can see on GJ, we have this fair value gap that has been filled. You can see this fair value gap has been filled on GJ. So if a bullish reversal pattern forms after this gap gets filled, okay, let's see, let's go to 15 minutes. Let's see the pattern of 15 minutes. Okay, so we can see here we have bullish reversal pattern on 15 minutes. Yes, this is a buy. Okay, a fair value gap has been filled on GJ, and it's giving us buy vibes. It's buy showing up in the markets. Okay, so if 1 hour, you could patiently wait for 1 hour candle to close above this level. Wait for 1 hour candle to close above this level. If 1 hour candle closes above this level, you could go bullish on GJ. You could go bullish on GJ if 1 hour candle closes above the high of this candle. That would be a good time to consider buying GJ. I can see on 5 minutes. I think on 5 minutes, you can see, I think a fair value gap was created here. Let's see 1 minute. I think a fair value gap was created here. Price has pulled back. Let's see. Let's confirm. You can see on 1 minute, you can see a fair value gap was created here. Okay. A fair value gap was created here, which has been filled. You can see that gap has been filled. And I think after it's, and a shifting market structure has occurred here, you can see Shifting market structure has occurred, retracement to fill the fair value gap before going bullish. So patiently wait for 1 hour to close above this level. If 1 hour candle closes above this level, then you could buy. That's my take on GJ. My bias on GJ is buy. Patiently wait for 1 hour candle to close above this level before you go bullish. That is what I see playing out on GJ. That's what I see playing out on GJ. I hope that is clear. It's a buy. Yeah. GJ is buy. Any other question? Is there any other instrument you want us to look at? Let me know in the comment section. If you have any question, any pair you want us to look at, let me know in the comment section. Any question? Any question? If you have any question, let me know in the comment section. Any question? All right. If there are no questions, we have to end the stream. Okay, Eurocard. Okay. Eurocard. Few minutes. Let's look at Eurocard. Few minutes. Eurocard. Okay. Eurocard. Let's start with the. Let me start with the weekly. So what can we see on Eurocard? There was a sweep in liquidity. I think Eurocard is bearish. Okay, let's see. This is the weekly. We had a shooting star here. Shooting star bearish. Then the next candle closed bearish. So that would be a sell. Okay, let's see. That would be a sell. And let's go down to lower time frame, daily. But before you sell Eurocard, wait for price to, there's a fair value gap here that I think it needs to fill. You can see that the bullish momentum is still very weak. The bullish momentum, as you can see, is still very weak. It's still very weak. So I think they just want to fill this gap, wait for price to fill this gap before you sell. That's what I see on Eurocard. Wait for price to, you can see a shift in market structure has occurred here. You can see after this sweep of liquidity, you can see what happened here. Shift in market structure has occurred here. Okay, so just wait for price to pull back, fill this fair value gap, then you sell. That's what I see on Eurocard. Let me go back to the weekly time frame. So if you are selling, you should look for coming for these lows, this relative equal lows. That is what is likely going to play out on Eurocard. And below this areas of liquidity, we have a fair value gap here. So this could be the next draw on liquidity on Eurocard. This could be the next draw on liquidity on Eurocard. Is that clear? Is that clear? Look for sales, okay? Look for sales, wait for price to fill that gap. After price fills that gap, then you look for a bearish reversal pattern, wait for a bearish reversal pattern to form on 4-hour time frame. Okay, after that fair value gap gets filled, wait for a bearish reversal pattern to form on 4-hour time frame before you sell Eurocard. Any question, let me know. If you have any question, let me know. If you have any question, let me know in the comment section. All right, guys. So that will be all for today's session. That'll be all for today's session. So I wish you guys a profitable trading day. Please ensure you apply good risk and money management. I've always advised you guys not to over leverage and don't over trade. 1 or 2 trades a day is okay. If your first trade is a winning trade, if it hits your TP, that should be all for the day. But if your first trade is negative, you could execute the second trade. Okay, you could go ahead and execute the second trade. But if your first trade hits your TP, then you should be okay with that for the day. Okay, you are only allowed to take a second trade if your first trade doesn't work out as planned. If it's your SL, then you can take the second trade. 2 trades a day is okay. 2 trades, and ensure that you don't risk maximum 2% of your account. 2% of your account, unless you're trading below $200. If you're trading below $200, then you'll be risking close to 3 to 4% of your account, which is okay. But if you have above $200 in your trading account, you shouldn't risk more than 2%, which is $4. $4. So it will take, for you to blow your account, you would have to lose 50 trades in a row. You have to lose 50 trades for you to blow your account, which is not possible. It's not possible for you to lose 50 trades in a row. Okay? If you are risking 10%, you just have 20 opportunities, just 20 opportunities for you to blow that account, which is too high. The risk is too high. So trade between 2 maximum. If you have above $200 in your account, if you have below $200, you'll be risking close to 3 to 5, between 3 to 5% on your account, which is fine. It's okay. Don't over leverage, please. Remember, FOMC will be released tomorrow. FOMC will be released tomorrow. So maybe after New York session today, most of the major currency pairs, the USD pairs, will go into a range after New York session today. So I think on Thursday, after FOMC, we would have a clear direction for dollar index on Thursday. And that is when I'm considering going bullish on the dollar after FOMC. So on Thursday, I am most likely going to be buying the dollar. But before FOMC, I think I'm bearish on the dollar at the moment. So bye for now, guys. Bye.